Good morning, everyone. Welcome to Midwest Market Solutions Insider Commentaries. It is Friday. It's August the 4th. It is a significant day as it's the payrolls numbers, it's the jobless claims numbers, and those are pretty friendly for the economy here this morning. We're seeing U.S. dollar rally as a result. Bond futures are dropping, yields are rising, and the stock market having a nice little run here in the overnight and extending into the morning hours as the economy looks to be fairly strong by some of these metrics, and we are seeing the markets, as I said, push a little bit higher, including the U.S. dollar, which should, in theory, hurt the wheat markets, but we did see a little recovery overnight in wheat futures and in corn. Beans also came off of their lows, came off of support, and tried to rally. I think we do see a little bounce ahead of the weekend. Some of the forecasters are talking extremely cold temperatures for this weekend. In fact, for this time of year, some areas are going to see record low temperatures. It's going to be very wet and rainy in Kansas City area. They could get 3 to 5 inches in Kansas City into Clinton, Missouri area, combined with very cold temperatures. The grounds are already saturated after 7+ inches of rain last week. Some of the forecasters also talking about chance of an early frost, and that has prompted a little bit of short covering in the markets as well. We have a supply and demand report out next Thursday, and that report should give us some short covering going into it. I do think you're going to see yield estimates start to come in that 163. It was probably the lowest area to 165, 166. USDA likely to come down to 166 or 65 yield in the corn. That should be what the market is trading, should be pretty well factored in. Private estimates this week, including Farm Futures, FC Stone, and Informa, all in that 162 to 165 area. The soybean yield's probably not going to come down much. They really shouldn't with the good rains that have fallen and cooler temperatures. You're going to see probably maximum yield in a lot of areas of the soybean market, and yields estimates I think going to come in that 47.5 range ahead of the report. That doesn't give us much upside potential in the soybeans when we have this type of weather. So a lot of times we will see a rally in the last half of August in the soybean market and into Labor Day. If we do see some sort of rally, really would encourage producers to look at either getting some protection locked in or some sales on the books, as yields, I think, are going to come in very strong. Now, the corn's a different story. I actually think you're putting in some sort of an early low here, way ahead of harvest, but as the data starts to trickle in from private plots and silage cutting, I think you're going to see the market start to stage a rebound as supplies of corn are going to be that much tighter than they were a year ago. In the livestock trade, we tried to rally yesterday in the cattle. Really were unable to. I don't see a reason why we rally the cattle today. In fact, with corn being higher, feeders should come under a little bit of pressure, is my feeling this morning. So we'll look for mostly lower cattle and hogs and higher grains this morning. We hope to talk to you soon. Give us a call. Any of our offices around the Midwest. This has been Brian Hoops from Midwest Market Solutions. We will talk to you again soon. Have a great day of trade.